The wealthy don't invest like everyone else because they're not trying to retire at 65. They're trying to build dynasties. And there's a reason the ultra wealthy don't park their money in index funds and call it a day. They're not chasing the market. They're building wealth on their own terms through strategic access to private investments that most people never even hear about. If you're a high income earner, a business owner, or someone who's done a good job at stacking cash, but you're realizing that the buy, hold, and hope strategy isn't gonna get you to freedom, this video will completely change the way you think about wealth creation, because what works for the masses is not what builds legacies. For those of you who are new to the channel, my name is Danny Gould. I'm the CEO of Gould Capital. It's a private equity firm that helps investors like yourself invest capital into hotel and commercial real estate projects without the headache sourcing deals, vetting operators, or managing the actual property. Now, over my career, I've overseen $250 million worth of real estate transactions here in Silicon Valley, and also spent time as the managing partner of a $300 million hotel portfolio. So when it comes to finding institutional grade investments, I know exactly what to look for. And the purpose of this channel is to share everything I've learned. Now, let's talk about the default strategy you've probably been told your whole life. Number 1, max out your 401k. Number 2, buy lots of index funds. Number 3, dollar cost average every month. And number 4, wait for 30, 40, or maybe even 50 years, hoping and praying that compound interest comes through and the markets stay kind. Now, that's what financial advisors tell you, right? It's the script they've handed out to everyone since the 1980s. And on paper, it kind of works, but only if you want to be comfortable. Only if your goal is to retire someday with enough. But here's what that strategy doesn't give you. No passive income, no control over your outcome, no protection from volatility, no tax strategy or no tax advantages to shield your earnings, and no say in how your money is actually managed. You are fully exposed to so many things. Interest rate swings from the feds, Wall Street trading bots, panic sell-offs every time there's a headline, a system that was built to feed on emotion and volatility, not protect your wealth. You can't influence performance, you can't hedge your taxes, you can't unlock liquidity on your terms. It's not really investing. You're outsourcing your financial future to a machine that you don't control. And that's the problem, because while the masses sit in the market, the wealthy own assets outside of the market. Assets that produce lots of cash, create tax shelters, and put them in the driver's seat. And what most people call a wealth plan is really just a 40-year waiting game. And that's not a wealth strategy, that's wealth hope. So ask yourself this: if you've worked your ass off to earn real money, built a business, stacked multiple 6 figures, made the sacrifices that most people won't, why are you handing the keys off to Wall Street? I mean, Warren Buffett said it best: Wall Street is the only place on the planet where someone will roll up in a Bentley and take financial advice from a guy that took the subway to work.
Well, if I were on Wall Street, I'd probably be a lot poorer.
Why are you gonna let some kid who just passed a Series 7 exam a couple of weeks ago dictate what happens with your capital? It's locked inside a system that was designed to keep you just comfortable enough not to question it. But the people building real wealth, they're not playing that game. Now, I've spent years working with the ultra wealthy and studying how they actually allocate capital. Family offices, hedge funds, endowments, billion-dollar portfolios. And what they do is not what the average investor is doing. What they do is clear. They go to alternatives, and they don't just invest in what's available. They invest in what gives them maximum upside, minimum friction, and maximum protection. And across all of these investments, there are certain themes that keep showing up again and again and again. First is cash flow. These assets create income that they can actually live on. They can reinvest that income or allocate elsewhere. They're not theoretical gains that are trapped inside of the market. They also prioritize tax efficiency. A lot of these alternative investments reduce their tax exposure through fancy tax tricks like bonus depreciation, accelerated depreciation, cost segregation. These are things that allow them to not just make more money, they get to keep more of what they make from their investments. And the last thing that keeps coming up is asymmetric upside. These are opportunities where the downside is really capped, but the upside is astronomically disproportionate to the investment. Think something like venture capital, where your downside is the money that you've invested, but the upside could be 10, 50, 100x of your initial investment. In that scenario, a mere $100,000 investment into a VC fund could return you upwards of $10 million. Now let's compare that with the public market. Maybe you get one of those. You might get growth, but no cash flow. You might get more liquidity, but at the cost of more control control and more oversight over what you're actually investing into. And you might actually see gains, but you're taxed to death on the way up. Alternative investments, on the other hand, are built to check all three boxes. Private real estate funds, private equity, private credit. These are all asset classes that give the wealthy what they actually want: predictable income, strategic tax advantages, and higher degrees of influence over outcomes. These aren't speculative plays. These are wealth machines that the wealthy have been using for decades, quietly, while everyone else just rides the market roller coaster. This isn't about avoiding risk. It's about finally understanding how to control it and make it work for you. And I know what you're probably thinking right now, Danny, what do you mean by control? What do you mean by stability? What do you mean by tax advantages? So let's break down the psychology of why the wealthy actually choose to go the alternative investment route. There's really four main reasons why. Number one, control. Number two, stability. Number three, tax strategy. And number four, access. Now let's break down these four pillars in detail. I know you're probably thinking, Danny, what do you mean by control? Because isn't the operator, isn't the sponsor supposed to be in control of the asset? And aren't the investors just supposed to collect the checks? And you're absolutely right. They have no direct control over the asset, but they do have control over who they pick to invest into. Versus stocks and bonds and whatnot, you're investing into a cohort, maybe if you're investing into an index fund, or you're investing into a singular board or a singular CEO to kind of call the shots and make decisions. But the truth is you don't really have a lot of oversight. Whereas in private investments, you typically have a lot more oversight, a lot more sway, and a lot more control over the people that you choose to operate the business or choose to operate the asset, and you simply cannot find that level of control in the public markets. The second pillar is stability. Now, with real assets like this, like real estate, for example, real estate doesn't crash 15% in one day because of a tweet or a missed projection. They're not priced second by second on Wall Street's panic meter. And people always need places to live, stay, do business, and that demand gives these assets a long-term resilience. In other words, you can actually sleep at night. The third pillar is tax strategy, and this is really where the game changes. With things like bonus depreciation, accelerated depreciation, cost segregation, and paper losses, you can offset real income while your asset grows in value. It's legal, it's strategic, and it's one of the biggest reasons why the wealthy love real estate. It lets them earn like the rich and report income like they're broke. And finally, the fourth pillar is early access. Public markets are late-stage investments. By the time Wall Street prices in the opportunity, all the upside's already gone. Private investments are going to let you get in earlier, before the big money floods in and dilutes the return. But that's not luck. It's by design, because the wealthy invest. Alternative investments are not a reactive investment approach. It's a proactive investment approach. And that's why they win big. Now, you might be thinking, sure, Danny, that sounds great, but I'm not worth $50 million. I don't have this massive family office. And I get it. But here's the part that most people miss. You don't actually need to be a multimillionaire to access these types of investments. The old gatekeepers, they're fading. And thanks to changes in regulations and tech, accredited investors, meaning doctors, tech founders, business owners, hires, anyone earning $200,000 to $300,000 or more per year, are stepping into private deals every single day without needing $10 million to play. The doors are opening, and the only question is, do you know where to look? Because let's get one thing straight. The wealthy don't hustle harder. They have 24 hours in the day just like you do. They just leverage smarter. They're not waking up earlier to buy the dip. They're not chasing hot stocks on Reddit threads, and they're definitely not setting their financial future on autopilot with a target date index fund. They simply invest in assets that pay them consistently, assets they can touch, understand, and influence. And while this might sound a little more boring than the stock market roller coaster, it's more predictable and more scalable. And unfortunately, the reality is most high income earners, people who make real money, are still playing the wrong game. Not because you're not as smart as these people, but because you don't have the time, knowledge, or access. And because they lack the time, knowledge, and access, they simply hand over their paycheck every single month to their financial advisor and say, throwing their money into the same markets that every American is invested in. Because if you're grinding day in and day out and you still feel like you're behind, you're probably playing the wrong game. Now, this isn't a crucifixion of the stock market or financial advisors. Index funds and stocks definitely have a place. They're efficient, they're simple, they can be your foundation, but they should never be your ceiling. Like I mentioned before, the average American has 95% of their net worth tied up into the stock market. Having 95% of your net worth tied up into something that's as volatile as the stock market literally makes zero sense. By placing some of your money into alternative investments, you're going to be investing into things that have a lot higher ceiling and also provide ample diversification away from the volatility of the stock market. Alternative investments help multiply your wealth, and the ultra wealthy figured this out a long time ago. Because it's not about working harder for your money, it's about making your money work harder than you ever could. So if you're done playing defense, if you want to own assets that pay you, shield your taxes, and build your legacy, then it's time to step off the Wall Street hamster wheel and step in to the private markets game. And if you're ready to take that step, Gould Capital was built exactly for investors like you. Now, access is invite only, but you can schedule a call with me using the link in the description down below to see if it's the right fit. This is Danny Gould, everyone, with Gould Capital, and I will catch all of you in the next video.
Thank you.